we're going to go on to the last roundtable for the afternoon on cargo misappropriation. All the speakers are sitting here at the table, beginning with you, Françoise Roubaud. You are Deputy CEO Essautier Verlingue, Yannick de Combas, Risk Manager, Louis Dreyfus Companies, Laurence Cobard, Claims Specialist, AXA XL, and Dirk Polfiet, Senior Claims Advisor, DP Surveys. Françoise Roubaud, you have the floor. We're going to try to define, within the allotted time, the purpose of this workshop, that is, define misappropriation and how to deal with it. In a nutshell, I think it's important to try to define what we're talking about, roughly speaking. Basically, and I will quote the definition in the dictionary, there isn't really a legal definition of cargo misappropriation. In the dictionary, in English, it states the intentional illegal use of the property or funds of another person for one's own use or other unauthorized purpose by any person with a responsibility to care for and protect another's assets. That is the basic dictionary definition. In terms of insurance, which is the topic for today, on the market there is no uniform definition, no uniform, unanimous legal definition. In 2017, there was a standard clause which appeared on the English market, but this clause, which goes through the basic definition of the dictionary, is not that widely used on the French market or even in the London market, in the policies we looked at. You can read through the terms of this definition, which is somewhat more precise. It says that the declaration has to be made 45 days prior to the date of this notification to underwriters. And of course, it's limited to the intentional diversion of the cargo. And that's not always the case. In this rather imprecise world, when it comes to this definition, there is what we could call a minimum definition. And almost all insurers, when they decide to provide this guarantee, agree. They say it is the availability, physical or legal delivery of goods entrusted by a co-contractant of the insured party, contrary to the instructions received and or any other physical or legal person who was not entitled thereto. Laurence will describe how misappropriation is not the same as theft. It's important to insist on the fact that we're talking about goods entrusted to a third party. That is what is essential in this special risk. Now we're going to try to define things a bit more and go into the history of things. Why and how do we ask insurers and our clients, depending on our clients' needs, to insure this guarantee? We're going to talk about the needs of traders in particular, and during storage. Misappropriation can happen in transit, during transport. There isn't really any difficulty with clients on the transport and transit side when you talk about misappropriation. And also, this is a risk which is more a trader risk than for industry. Industry, when they store, because we're going to talk about storage of goods mainly, it's usually during processes or plants, it's usually in their own warehouses. It's not the same issue, but for traders, in fact, these are trading companies, there is a need, because during their trade, be it before transport or after transport, they're going to have to store the merchandise. They're going to have to store the goods because there's pre-financing. They have to build up goods in a warehouse before storing on a ship. There may be changes in the trade. Increasingly, people need to give credit lines to their clients and store in warehouses the goods that are going to be sold but have not yet been paid for, and they will be sold bit by bit by the people on the spot who receive the goods. So they want to secure this inventory because there are banks financing the inventory, giving credit lines, and they want to be sure that if something happens, if the inventory disappears, the inventory guarantees the finance, that there will be some coverage. So it's to guarantee the situation. It's a real need for traders, and it's something that's specific to their business. Hence, insurers have wondered about affording and offering this guarantee. Many years ago, about 20 years ago, I would say, there was a major debate. Often, insurance policies did not typically provide this coverage. It wasn't either provided for or excluded. And we thought we were in pretty much of a gray zone. Do we consider this is covered in blanket coverage? Or as this is goods entrusted to a third party, well, the third party may be involved in the misappropriation. It's not the theft in the conventional sense of the word. So it's a very gray zone, which gave rise to many discussions, not very nice ones, between broker, insurer, and client. Over time, insurers thought, well, either we cover this special risk and we cover it in defined conditions, or we exclude it. But let's try and have something that removes this uncertainty and gets rid of these unfortunate, unpleasant debates between the various parties. So that is when, in insurance policies, we had these misappropriation clauses appear. Depending on the policy or the market, there was a lack of uniformity in the wording of the clauses, and sometimes there was no definition. There was just including misappropriation without defining how it was actually covered. And there again, that gave rise to any number of problems when it came to the implementation of the guarantee. And after that, there was a crisis in certain countries. There were misappropriation claims, which were fairly major in certain countries, and they were talked about a lot, particularly in the area of commodities. So insurers said, well, we no longer want to cover the risk of misappropriation in our policies. We gave this, either we provide it on an exceptional basis and in only certain countries for a given kind of client who takes the requisite preventive means, but we don't want to provide this as widely as in the past. So it's true that increasingly, when insurers continue to provide this guarantee for clients, the idea is to have a precise definition of what's being covered. What's interesting to look at, before I give the floor to Laurence, is the following today. What are insurers prepared to provide by way of guarantees to their clients? How can they define this misappropriation clause? And what are the difficulties encountered? Thank you, Françoise. As you've just said, this is not a new phenomenon. What's new is the complexity and speed of sales, more dense international trade, the sophistication of fraud. So we need to have safety measures so that the market can work. We need to find the right practices. As you recalled, in the absence of a definition and a standard clause, what we're trying to do is to have a clause that's useful and understandable, that won't be sort of emptied of its very substance as soon as the first difficulty crops up. It needs to be based on something stable. It needs to be properly defined, and then the conditions which would limit this guarantee also have to be defined. Now, when it comes to the definition at present, we use the lowest common denominator. There's a contractual point. There has to be an intention. The contractual side is a co-contractant who was entrusted with goods no longer has them. That might be a commercial problem, but that actually defines misappropriation. Intentional. The current trend is to broaden the guarantee to include fraud, theft by a co-contractant, and even negligence can be treated as misappropriation. And finally, there's a technical element which is essential and fundamental at present. This guarantee covers physical losses for goods which actually existed. You have to prove at a given point that the goods that disappeared really did exist. It's not a guarantee of financial loss. To be useful, this guarantee has to fit in with the other clauses of the policy. It's like a puzzle. You have fraudulent document, theft, that's covered in policies, and all sorts of other clauses which have necessarily to be useful. You have to have a clause that says the goods have to have existed, so you have to be able to prove that. And finally, yes, says the speaker, I've moved ahead too fast here. So these elements are then rounded off by limits, which may be greater or less, depending on the customer's requirements. This work has to be done together in order to have a useful, practical clause which is readily understandable. You have to define all the limits. For example, the contractual limits, which limit the beneficiaries, that lays down acceptable limits for the insurer and insured party. Financial limits, you put a ceiling on the risk with a franchise, annual aggregates, that covers the financial side. Limits in space. When I talk of this interaction with other clauses in the policy, when there's no definition of the place of storage, it's very problematical. You don't know what financial limit to apply. You don't know whether it's just one warehouse or a whole city. These are things that have to be precisely defined in the policy in order to be readily understandable, so the insured party doesn't cope with a problem he or she didn't foresee. And it has to be limited in time. We have guarantees which are sometimes unlimited, and they follow the good until such time as the good is used. So that seems to be pretty much under control when it comes to definition and the limits and possible extensions. In practice, it's actually more complicated than that. Here you have some photos because they are fairly enlightening. Typically, here are goods in bulk, which are all mixed together because, say, one good disappears for one customer, but not for all of them. There's a lot of toing and froing here. The management of the claim is very difficult, whatever the clauses in the policy. Here's another example. This seems quite simple and more traditional. This is a rectangular warehouse with lots of bags, sacks. They're all pink. It's the same brand, but they come from different ships, insured by different companies. And if you're not careful, the market may pay for the same loss 4 times over. Here's another example. I was talking about a possible extension or not. And the various inventories, here, for example, you have a client. And inventory management on the left, that's well done. On the right, it's not obvious. Here, it's almost impossible to have a proper inventory. You can't even gain access to the goods. You can just imagine a given volume. You can't really count things. Here's another example, which is really problematical for us. It's the oil-based products. inventory on land and at sea undergoes constant flows, and the management of these inventories in terminals a posteriori by our experts is very difficult. You don't know where the oil is that belonged to this or that insured party that might have been moved even involuntarily because the manager of the terminal put it into one big vat instead of another. It's hard to know exactly what happened and where. It's extremely complex to sort things out. In addition to these technical difficulties, when it comes to managing the claim, you have the specificity of our cargo policies. There are general terms and conditions under English, Belgian, or French law. Depending on the legal system, you won't have exactly the same interpretation. So the answer of the insurance company won't be exactly the same either. In other words, you have to do comparative law in real time, and that slows down the understanding of all parties concerned when it comes to a given claim, particularly these claims which happen with the same frequency all around the world, and you have these commercial contracts that come under local law or the warehouse law. Some commercial law comes under English law, others under Belgian law. So you really have to assimilate all the facts and be able to qualify them legally in a proper way so that the insurer and the insuree are sure of where they stand. A question one can legitimately ask is how far can we accompany our insured parties? Can our product really meet all the expectations of the insured party? This misappropriation clause is evolving. I think it's Frédéric Deneuf who said things are in constant flux in the marine world. We really have to keep up with the real economy. We need to provide a solid answer when we do joint work with an insured party in order really to match that person's need. In claim management, we dream about having all sorts of insurances so we don't end up with something that can't fit into our guarantees, or else we could have a certain risk and then they could be rounded off. But misappropriation is a major risk, and it remains. I think that risk control is very important. We want to be able to help our insured parties by giving them the right products. Thank you very much, Florence. Before giving the floor to Yannick, I think it's really important and worthwhile to think about a period when nothing was clear, things weren't covered or were excluded, or otherwise it was the contrary. They were covered for lack of an exclusion. And then the market evolved. There were more claims under this risk as the world changes, and insurers wanted better to control the risk by laying down certain limits. Now, are we in a position where the guarantees proposed by insurers are sufficient in terms of the needs and expectations of insured parties and new developments in the economic world? Similarly, what kind of insured party, because insured parties are different too, what kind of insured party is in a position to help control this risk, to make it insurable by insurance companies? I'll give the floor to Yannick. Thank you, Françoise. In your introduction, you talked about the need of traders who have to store and finance inventory. They need to secure operations. That was your starting point. Well, this risk that existed 20 years ago is still as real now, if not more so, in fact, because look at current events. Look at the health crisis, which put a lot of pressure on traders, and they need to smooth out the supply of raw materials. This smoothing out, this steady flow is complicated to achieve and exposes traders to risks which have been accentuated by fluctuations in the price of raw materials as well. We're right in the middle of this kind of phenomenon. The price of raw materials is increasing. The more a product is expensive, the more it will be sought after. And when we talk about misappropriation, we're talking about goods that people are eager to appropriate or misappropriate. And finally, we can talk about an increased risk owing to the geopolitical situation in certain parts of the world. Once again, traders in the U.S. aren't just in the U.S. and in China. They operate in West Africa, in Eastern Europe, which all entail special risks. So basically, for the trader and for the insured party on the whole, because it's not just traders who can suffer from misappropriation. For the insured person, misappropriation is a risk, and insurance is a way to cover the risk. The risk is transferred, their risk is transferred to the insurer. But for that to be possible, there has to be a guarantee which is useful. I call this an essential guarantee, in fact, because yes, cargo coverage, goods coverage doesn't necessarily cover misappropriation, but misappropriation is just one of the risks, and the magnitude of the impact is such that it could threaten the financial security of the insured party. So it's something that's absolutely essential to ensure the ongoing business of the insured party. They absolutely need coverage for misappropriation. The guarantee has to be clear. It has to be fully understood by the parties concerned. The insured party has to be absolutely sure about the extent of the coverage he or she has. One cannot, as an insured party, set up a venture or an operation or a trade with the certainty that you are insured with all the exposure, which may amount to millions and millions of dollars, if there is some uncertainty as to the implementation of the clause at the time of the claim. Once again, I think misappropriation clause is an essential thing. Now, for it to be clear and readily understandable and known, the guarantees have to adapt over time. We have seen that the misappropriation guarantee has evolved. The theft clause included misappropriation initially, and then there's an English clause which is worded in such a complicated way that nobody understands it. We need a clear misappropriation clause, and I think that's a very good thing. For me, the clause will only be useful if it is adapted to the needs of the insured party, if there is a link so that the insured party, the broker, and the insurer, that means they all have to know what kind of risk they need to cover and the way in which the insurance policy should be put together in order to cover this kind of a risk, which is essential, as I said. Of course, the products will vary from one insurer to another. Look at the COVID crisis. There was a lot of tension, a lack of food in certain areas, hence an increase in the risk of misappropriation, but it could also be something else, raw materials, construction material, for example, building material, which some people may hanker to get their hands on, increasing the risk of misappropriation. So for insured parties, what is essential is to anticipate right from the very start when entering into an insurance contract, or in any case before the claim occurs, one has to ensure that we will avoid endless discussion in the event of a claim. When drafting the policy and implementation of the policy, all the parties have to understand there should be no surprises either for the insurer or for the insured party. Now, currently, when renewing an insurance policy, one should discuss the guarantees. Often that's very limited, however. People just use standard policies, and there isn't this necessary discussion, this necessary interaction between all the parties concerned. They need to understand fully the risk of the insured party, the exposure, and build a useful, effective clause which can be triggered in the event of a claim. And for me, that's an essential point in the building up of an insurance policy and a relationship between the insurer and the insured party in order to cover the risks faced by the insured party. We talked a lot about insurance contracts as a mode of transfer of the risk of a misappropriation. The risk manager may be quite involved too in terms of preventive action that can be taken to avoid misappropriation or to scale back the effect, or in the long run to improve recourse with a view after the event to correcting the problems that made the misappropriation possible. Now, the risk of misappropriation, the idea is to intervene before the operation itself, avoiding certain modes or risks which might make things worse. For me, aggravating factors should not be a reason to exclude a guarantee. However, for the insured party, this should provide stimulus to improve risk management and reduce exposure to that kind of risk. It goes hand in hand with our operations. Storing things in certain places, well, you cannot avoid storing things with a producer or a processor, so excluding an aggravating factor and saying, oh, you store in the reception area. Sometimes you can't avoid that. For example, you can't just say, well, this isn't the noble part of your activity, we can't guarantee misappropriation. Processing of the good, well, if it's not stored, it can't be processed. So things form a whole, and you have to accept things as such. Aggravating factors, well, let the risk managers deal with that. And that brings me to the comments you made. You talked about the choice of the person you want to insure. Indeed, the choice may consist of saying, will this insured party take account of these aggravating factors and do some action to check that? Of course, we were talking about storage at the place of reception, co-storage with other goods, unidentified inventory, or inventory, raw materials piled up a mountain high. Well, if you can avoid that kind of thing, it's much better to do so, but you can't always. We talked about piles of goods, and we compared certain shops or warehouses in terms of the way they store things. But you can't control all that. It's not always the case. And once again, that brings me back to the risk management policy. The risk management policy doesn't cover just 1 year. The relationship with the insured party, well, often there's an annual renewal, but a risk spans several years. If you don't, in certain territories, deal with the storage area problems, you can't solve that the year of the insurance contract, but maybe 1 or 2 years later. And we're talking about a scale of several years. So you need to provide the requisite support for the insured party, so the insured party understands the risks and so that he takes long-term measures which will then make it possible to reduce exposure to the risk.
The insured party should make documentation checks. Beyond the reduction of aggravating factors, there should be documentation checks. There should be checks on contracts. They should screen their contracts. It's almost a bad word, but it's about common sense. You need to know what you're doing, the contracts that you're signing, and measure the scope of those contracts. It's essential. Measuring the solvency and the insurance of your counterparties. These are essential or even traditional prerequisites that you can expect from an insured party. You can expect them to do that. You're not going to put millions of dollars worth of goods with a counterparty that you haven't screened, or at least tried to know whether they were insured for civil liability in proportion to what the local market can provide. You can have a counterpart in the US and be insured and have a different financial solidity that is different to a counterparty in a developing country, and I'm not going to name anyone so as not to shock anyone. And on a different territory, the civil liability, on some territories, the civil liability insurance market does not exist, and yet that's not a failure on the part of your counterparty, and that will prevent you from having commercial relationships. But as part of your due diligence and your screening, you have to adapt to outside elements in your intervention. And then the insured should not stand on his own. The insurer, I'm not talking about all insured parties, but some traders, some industrial companies don't have the necessary size to put IT tools in place to screen counterparties. In the 2000s, there was the appearance of warehouse scoring tools or maritime trip scoring tools. For a lot of insured parties, they don't have a counterparty screening tool, an algorithm that will help them with a basic system based on traffic lights, red, amber, green, to help them whether the relationship they're going to enter into has a high, moderate, or low risk of misappropriation. That's not going to determine whether or not they enter into this business relation. That's going to trigger additional risk management activities for them. You shouldn't consider that because there's an increased risk, you're not going to execute or establish a commercial relationship or insure someone, but you need to look at what necessary adaptations must be put in place so that you can enter into this business relationship. Another thing, and that's return on experience. Insurers or groups of insurers have experience in losses or events that doesn't compare with that of a risk manager, and it would be a shame not to let others benefit from that with return on experience and explanations. This is something that is lacking in relationship and partnerships between insured parties and insurers, from that perspective at least. And then, indeed, the insured party should implement risk management operations, whatever the level of risk, whether it's low or very high. They need to focus on where the risk is high, but they need to make their teams aware. They need to make their traders aware of the risks so that they can perceive weak signals of misappropriation that's going to happen or not. The risk manager needs to raise awareness if they've got a legal department, and if not, the people signing the contracts with the necessary warehousing, SMA or CMA agreements with responsibilities that are real responsibilities, counterparties that you pay to conduct surveillance or monitoring on warehousing. risk managers or their companies need to financially screen their counterparties. This is necessary. It's almost natural. And lastly, beyond the experts' involvement, which is essential, we need to get back control on monitoring of our stocks. Insurers pushed us to do that, asking for regular surveillance of our stocks. And this is so natural now, sending an expert or your own people to inspect and visit warehouses to make sure that the millions of dollars worth of goods that are stored there do exist and are in a good condition, not just for misappropriation, but other damages. That's essential. Thank you very much indeed. We have 7 minutes to have the experts' viewpoint. We're counting on you. So yes, we'll give the floor to Dirk. The expert's role is on two fronts. There's prevention, visits and stock audits that we conduct in situ, and there's investigation of events, and we can talk about the two. First, as Françoise already explained, if there's a stock in transit, if there is real transit, there are fewer problems. The biggest problem is if that's really bulk stock. And now there's a tendency to stock mixed goods, commingled goods with different owners. And for us, that's a problem with checks. The second trend is when you buy cargoes that are already in storage, so there's no entrance of stores, and you can't have any entry checks on goods, and you have problems with conclusive evidence about the existence of the cargo. We've already shown some pictures. Checking in Africa is very different. Here it's a different situation. You can still tick when you have CMA or SMA contracts, but with commingled stocks, you no longer do that. You consider that it's not useful or accurate to check commingled stocks, and so you no longer sign CMA contracts in these situations. Even if you've got inventory that is stored with identical goods, that's a problem, as shown by Laurence. With oil, it's a problem if you transfer from one dock to another. How can you keep track of the cargo during storage? I'm talking from experience with wheat in Ukraine and Russia. It's the same thing in an elevator. You need to move the cargo for ventilation reasons. And so in this respect, it's similar to what's already been explained. What are the consequences of commingled stocks and silo purchases? Well, there aren't any more checks. So when you investigate cases of events or claims, it's always the case that there's a lack of checks at some point. The second consequence for commingled stocks and silo purchases, the documentary process has become more important. Proving and giving evidence of the existence of the goods, that's essential. The authenticity of the documents has become even more important in our claims investigation. But first, there are some very interesting pictures. These are still problems with identification. For instance, a wheat cargo that doesn't have any share. There's no barcode. You can't really identify that this is your cargo here. In the center of the screen, this is a 100,000 ton elevator, and there are cells of 200 tons. So there are lots of different cells where you have the goods. And how can an expert check the goods? You can take probings, as you can see on the right, But what are the results going to be? You can see that there are some goods here, but you can't check that this is the insured goods. And that's the basic problem for us in the checks. You need to identify and give evidence of the existence of the goods. As I said earlier, the documentation process is more important, and so to transfer goods from one owner to another in Ukraine, you need 6 documents. So my colleague in Ukraine will do stock checks on the spot, check all the documents, whether they have the right stamps and signatures, whether everything's above board. And this is really to protect ourselves if we need to go to court for legal cases. This is the evidence you need to provide. This is the proof of the existence of the cargo. So the claims, as I said earlier, if they're stuck in transit, it's easier because you've got letters of transport, you've got the receiving notes at the elevator. Sometimes you've got test reports from test companies that perform regular checks at the elevator in particular. That's easy. But if it's in bulk, if it's a silo purchase, if it's commingled stock, it's harder to make observations and give documented evidence of the existence of the cargo. So, investigating misappropriation, we always need to take quick action, especially if there's commingled stock and there are different owners that think that they have a right on the same cargo. It's hard to send a bailiff to seize the goods if you can't identify the goods, and that's a basic problem. When we're appointed for an investigation, very often it's too late. We get there and you see an empty silo or elevator, nobody can explain. And it's, as I explained earlier, it's always based on the documents that you need to provide evidence of a deed and the existence of the goods. That's the basic. Well, yes, indeed, time flies, and we'll reach your conclusions. We are looking forward to hearing it. Well, as I was saying already, there's a problem with identification in general for simple recording of the claim. And now recourse. There are implications also for recourse, because if you can't provide proof to a court, it's harder. Proof of the title of ownership on the goods, even if you don't have the official warehouse receipt, it's possible to provide evidence to a court that you have the title of ownership with the proof of payment and the purchase and sale contracts, but it's always easy to prove your ownership rights if you've got the official certificate, because that's always better if you do a trade based on official documents, and so you can have legal recourse, and that facilitates the enforcement of rights. It's easier than in other cases. Thank you so much. Thank you, everyone. To conclude very quickly, we are going slightly over time, but by a small margin. By way of conclusion, if we can ask about the future of this specific guarantee, after all the explanations and developments by everybody, it's clear that there's evident need for insurers to carry on giving this guarantee. It was discussed at IUME for some insurers that no longer wanted to cover this risk. Is it possible to cover them in isolation on other markets as an accessory to fraud risk, covering the financial consequence of scams, but covering this as totally separate risk is an illusion in the current system, because if it's disconnected from a certain price volume but compared to the client's overall business, it's hard to find premiums that are suitable for both insurers and insured. So what future for it? It's, as we are saying, we need to stick as much as possible to the reality, have as much dialogue as possible, and have a lot of collaboration between the broker, the insured, the insurer, with support from experts in order to find the best possible prevention in order to control this risk as best we can, so that we can carry on finding insurers who will agree to continue helping clients in their business and provide the necessary guarantees. Thank you so much. See you at 4 after a short partner break.